So about a month ago, WP Carey announced that they'd be completely exiting the office sector, and in doing so would be spinning off the majority of their office properties into a newly formed real estate investment trust called Net Lease Office Properties, ticker symbol NLOP. Now this news was not warmly received. It upset a lot of investors for reasons we'll discuss in the video. It had many feeling left in the dark because there weren't too many details surrounding the spinoff aside from the announcement of it happening and the expected timeline. Having said that, a few days ago I got this information statement from WP Carey that shed light on some of the mystery surrounding the spinoff, and that's what we'll be going through in this video. We're gonna get caught up on all of the spinoff news so far, and I'll give you guys my thoughts on the company and what my plan is with it moving forward. Anyway, truth be told, after going through all of this information, there were still some unanswered questions about the spinoff, but there were two key pieces of information that the statement did provide. The first of which is the number of shares you'll receive in the spinoff. So for every 15 shares of WP Carey that you own as of the close of business on October 19th, which has already passed, you will receive one NLOP common share. So for example, I currently have 30.1 shares of WP Carey, which means I'll receive 2 NLOP shares from the spinoff. But then, what about that remaining tenth of a share? What do you get for that? Well, according to the information statement, if you have any fractional shares of WP Carey, you'll just receive cash in lieu of receiving any fractional shares of the spinoff company. Anyway, the second thing that we have confirmed is when we'll receive the spinoff shares of NLOP for sure. We've already established that October 19th was the record date, but as far as when we'll actually receive these spinoff shares, the company expects that to occur on November 1st, so about a week and some change from when this video is released. Now, as I mentioned, a lot of investors are not happy with the company for doing this spinoff, and the move has actually caused a lot of prominent investors in the dividend investing community to actually sell out of their positions, like Dividend Bull, who is one of my favorite creators here on YouTube, as well as Brad Thomas, who is one of my favorite authors on Seeking Alpha. In their respective publishings on the subject, both investors felt betrayed by the move, and they're far from being the only ones. There are countless investors in the comment section who share the same sentiment, and in a sense, I understand why they're upset. You see, many investors love WP Carey for its high dividend yield and extensive history of growing the dividend. They've been doing so for the last 25 years. But because of the spinoff, what's left over of WP Carey will be paying a lower dividend than what they were paying before, which, as I'm sure you can imagine, has definitely rubbed investors the wrong way. So not only does this erase the company's 25-year dividend growth history, which, by the way, is something that did not happen when Realty Income pulled a similar move a couple years ago and spun off their office properties, but to add insult to injury, the spinoff announcement and the resulting news of a reduced dividend came right off the heels of the company actually raising the dividend. Announcing the spinoff in this fashion was like pulling the rug out from under the company's shareholders, and I think this Seeking Alpha comment from John Rhodes sums up pretty well how a lot of investors are feeling. He writes, "The action is fine, the timing is terrible, the communication poor, WP Carey away my dividend and my faith in the business," with a lot of clown emojis there at the bottom. Now, with all of this said, prior to going live with this news, WP Carey's management team had to have known that they would be upsetting a lot of shareholders, and despite this, still decided to go ahead with it, which begs the question, why? Why did they think this would be a good move? I mean, if they were willing to knowingly upset their shareholders, they must have good reason to believe that the spinoff is in the best interest of those same shareholders that now want to chase them with pitchforks, and they actually did discuss their reasonings in the information statement. One reason they think this spinoff will be a good move is because it will allow the management team to focus on the company's core portfolio of assets without the office properties, and by doing so, they believe it will allow them to more effectively create value for shareholders. So in a nutshell, the management team believes that WP Carey without its office assets will have higher growth potential and less risk, therefore making its more focused, office-free portfolio more accretive to shareholders. Anyway, their second point of reasoning is that will allow investors to evaluate both companies separately and better assess the performance and future prospects of them both individually, and by separating WP Carey, it will allow investors to better control their asset allocation decisions. So essentially, this also gives investors more freedom to control which type of real estate assets they want to invest in, because some investors might not want to invest in office real estate. I know many investors who don't, and because of the spinoff, they'll be given a choice in the matter. Anyway, with that said, there are still some things that we don't know yet about both of these companies post-spinoff, and I know the most pressing thing that is top of mind for most investors is what is going on with the dividend. We do know that NLOP plans to pay a dividend at some point, but how much of a dividend is still up in the air, and the same is true for WP Carey post-spinoff, but one recent article on Seeking Alpha does speculate on some numbers and writes that the dividend is expected to be cut to somewhere between $3.61 to $3.87 per share, representing a 12.6% reduction, so we'll just have to wait and see if that holds true. As far as the dividend goes and it being reduced, my hope is that it will end up being like taking one step back to then take 2 steps forward, and I hope that this will result in more dividend growth for the company, because historically they've been pretty weak in that department. I mean, their 5-year dividend growth CAGR isn't even 1%, and I'd be curious to know know too what you guys think. Leave me a comment below and let me know what you think about the spinoff and what your plans are with this company moving forward. Personally speaking, at this point in time, I'm hanging in there with the company, and I'm actually planning on adding more to my WP Carey position after the spinoff. Taking a look at my position using my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download this spreadsheet in the description of the video. But looking at this, like I said earlier, I have 30 shares of WP Carey, and my average cost right now, about $67.50, is quite a bit above the current share price. And scrolling over, looking at my return with this company, on a total return basis, if we include dividends in the calculation, I'm not doing too bad. I'm only down 10%, but just in terms of share price, guys, it's not looking good. I am taking a beating, and the company in general has just been taking a beating as well. If we look at WP Carey's share price performance this year, it's not great, guys. They are down 31.6%, a very substantial drop. And just in the last 30 days, they are down another 15.8%. This company cannot catch a break. And right about here is where they announced the spinoff news. We can see that just from that, they went from about $64 per share to then being under 60, and they've continued to decline from there. And with this drop in share price, guys, this leaves the company really close to their 52-week low, just a couple of bucks off, and their forward P to FFO, which is like the real estate investment trust equivalent of the PE ratio, is also looking pretty sweet, 10.37. This is almost in the single digits. So just based on how the share price has been moving, and considering my current cost basis is so far above the current share price, I have a really good opportunity to bring my cost basis, bring my average cost per share down. And so that's something I'd like to take advantage of. And also just based on how WP Carey is diversified in my portfolio, I have a lot of room to do so. We can see it's only 3.4% of my portfolio's total weighting, so it's not a big position for me at all. And if we scroll down looking at how my portfolio is diversified by dividend income, only 5.6% of the income being generated in my portfolio comes from WP Carey. This is still at least a couple percentage points below my portfolio's heaviest income generators like Realty Income, which is sitting at the top at 8.74%. Altry Group, which is not too far behind that at 8.67%. We have OBDC at 8.14%. We have EPD at 7.5%, and KRC at 7.35%. So like I said, I still think I have room to continue growing this position without it being at risk of being too overweight in either department. Now, along with WP Carey, I'm also planning to add more to the 3 dividend kings that I'm telling you about in this next video right over here. Like WP Carey, these 3 have been getting absolutely destroyed, and my plan moving forward is to start picking up some more shares of all of them. So click right over here to check them out, and I'll see you in the next one.